For newcomers, investing can be an extremely stressful experience as you're putting your hard-earned cash on the line. And today we're going to talk about some ways that you can really de-stress your investing experience. How's it going, guys? Ryan here with another episode of my stock market basics series, and today we're talking about my 4 key ways to de-stress your investing experience. And this is really aimed at those people who are inexperienced investors and they may not have put their own money on the line before, because obviously you're going to be dealing with the highs and the lows of investing. But before we get into that, guys, please remember to give this video a thumbs up. It helps me out so much. Subscribe for more content and comment any questions or queries in the comments section below. So let's get straight into it. Now, as I said before, investing, in particular for newcomers and even experienced investors, can be an extremely stressful experience because more often than not, you're seeing your money go up, go down. There's fluctuations constantly going on, and it can really sort of take over your life. So today, what I want to do is share with you my 4 ways in order to de-stress your investing experience. And to kick it off with number 1, and one of the most important things you must do as a long-term investor, is find a stock or find stocks with solid fundamentals. At the end of the day, if you are investing in companies that have an incredible potential for the future, have a solid base to start themselves off with from where you've invested, then you really don't have that much to worry about. You want to try invest, in particular if you are a newcomer and you want something a lot less riskier, in those established businesses with pedigree, with clear growth plans and potential for the future. Make sure you are choosing companies which have a solid cash flow, little to no debt, and a market cap which is not overvalued. If you're looking for something for a bit of an extra kick, look for those companies which have a low market cap, because then you do have the growth potential there and you're more likely to see over time, in a shorter period, your stock increase in value. And for me, this first tip is absolutely the most important, because your investing success is going to be built upon the shares you invest in. So you need to make sure you really choose the right ones, or otherwise you're going to be suffering and you're going to be stressed. Now, the second way, I suppose, that I don't stress over stocks is looking at price fluctuations. That is what you do not want to do. If you're looking at the price fluctuations as a as a long-term investor, as opposed to someone who's day trading, then you're really not following the correct methodology. You want to make sure you have your strategy in place. So if you're getting into investing, you're more likely than not looking at long-term investments. As a result, these daily price fluctuations don't really matter because they're not part of your long-term game. Yes, the stock price is going to drop. It's also going to rise, and it will drop again and rise and keep going up and down and keep fluctuating. If you are constantly watching the share price of your stock, you are going to be absolutely stressed. So going back to the original point of investing in stocks with solid fundamentals, make sure you are investing in those stocks so that you don't have to watch the daily price fluctuations, because there is less of a risk involved. Now, the third point that I'm going to make encompasses a lot of these things as well, and that is ignore the crap that is posted on social media and forums. People get extremely emotional, and effectively they are not looking at the correct things. They just post exactly what they think. So what you're doing is you're letting your strategy be clouded by other people's opinions. And this is something you want to try and avoid as much as possible. So my recommendation is, yes, get on forums, get on social media. In particular, I like to use Twitter quite a bit to communicate and interact with people, but take everything you read with an absolute grain of salt and don't let it cloud your judgment when it comes to your long-term investing strategy. And this then links into my fourth and final point, and that is what you need to focus on are the facts and the announcements that come out from a company. If you're focusing on the facts and the announcements, you can make your own decisions. If the facts change, if the story fundamentally changes of the stock and they originally were looking fantastic and now based on what they are reporting, they aren't so much anymore, that's when you know you need to sell because it's likely going to drop in value over time. If the facts are still showing that your company that you've invested in is an extremely competitive stock on the market, then you don't need to worry so much at all. You can really just sit back and relax and let the share grow. And yes, over time it might stagnate, but hopefully it develops into a share that could potentially pay dividends in the future or already is paying dividends. But if you're looking at the announcements, if you're looking at the facts that are presented by the company as well as looking at the rest of the market, you don't really need to worry too much at all. Now, linking all this together, my advice is to keep these four things in the back of your mind at all times. If you keep checking this, maybe even once a week, just write it down somewhere and you keep checking it, and that way you're not going to deviate from your strategy. You're not going to let your judgment be clouded by the sort of things you see on social media, people hyping up stocks, people talking absolute crap about stocks. You don't want to be clouded in your judgment and ultimately lose money because you're not thinking clearly. And this links all the way back into the stress factor. If you follow these four key rules, then you are going to be a lot less stressed than you would if you did not have a strategy in place, you did not have a clear focus of what you are doing with your own money. Because at the end of the day, in particular, if you're investing long term, you're not really caring about what's happening right now. You want to know what's going to be happening in the future. Where's this company now versus where is this company going to be in a few years' time? And if it's in a significantly better place, you can see that that company is going to grow. Everything else doesn't matter. It's completely irrelevant. You just want to make sure you're investing in the right companies and not being influenced by outside factors. Now, I really hope you enjoyed the video, guys. Please leave any of your comments down below and ask any questions and let me know how you guys deal with the stress and the anxiety of investing in the stock market, because people have lots of different strategies and ways to deal with that sort of thing, but you really got to tailor everything to the individual person and see what works for you. And if you liked the video, please remember to give me a thumbs up and subscribe for more content. And with that, guys, have an awesome day. See you next time. Cheers.